Hello and welcome. I'm joined today by our Chief Investment Officer, Vasilis Papagiannou. Vasilis, good morning.
Good morning, Andrew.
It's the beginning of the month. It's also the beginning of the quarter, and so your monthly investment updates and your quarterly investment outlook are both hot off the press. Can we start by you giving us a quick summary of the main views from those documents?
Going into the third quarter, we remain on our cautious outlook. On rates, we acknowledge higher rates due to hawkish Fed and improving macroeconomic conditions. But on the other side, we are a little bit more negative because we expect pressures coming from inflation expectations. Turning to credit, we do expect carry collection to remain the key theme. We focus more on companies with strong fundamentals, and we do favor high yield over investment grade. And last but not least, on equities, we expect modest gains going into the third quarter. We favor US over Europe and UK, and we also favor a global consumer sector.
You warned us months ago about the potential impact of protectionism and trade wars, and now we're really beginning to see the first victims of that. Last month we saw Trump turn on Harley-Davidson, tariffs on EU auto manufacturers, and restrictions, of course, on Chinese investments. Where do you think this is all heading?
Every week we get a new episode on the tariff and Trump's tariffs saga. I think currently we are in a tit for tat type of trade wars on both sides, either Europe versus US, and then now we expect how China will retaliate as of July 6th with the US tariffs going into effect. I think investors should be a little bit more cautious. They should avoid countries that have large current account surpluses. They should avoid sectors or companies which are heavily exposed to global trade. And I think the end result will be a little bit of moderation in global growth and most likely higher global inflation that could hurt and would hurt consumers.
Can we turn now and talk about emerging markets? Because last month saw a sell-off across a whole range of those markets: China, Mexico, Argentina, Turkey. I guess some of that is off the back of the strong dollar, but the other factors at play. Can you give us some insight?
In the last quarter, the EM has sold heavily, and it was for various reasons across the board. We had a lot of political turbulence and noise. Turkey, Mexico. In October, we expect elections in Brazil, and on the other side of the world, in Asia Pacific, we had most of the countries that are exposed to global trade experiencing significant losses. Now, the main reasons was one, stronger dollar, and two, desynchronization of global growth, with the US still continuing to be quite strong and the rest of the world being more on the moderation side. Going forward, we remain underweight emerging markets. We do expect a bounce in the third quarter as most of the EM space closed at the lows in the previous quarter, so we do expect a bounce. But the only bright spot currently, and has nothing to do with the World Cup, is Russia.
Well, I'm rooting for Russia in the World Cup, as you know, because I have them in the sweepstake. So let's finish off as we often do with a concrete investment idea. So we published a blog post recently on our Dolfin Diary blog about minimalism as a trend in the millennial sector. And your team has an investment idea specifically around how to profit from trends in that demographic. Can you tell us a bit more about that?
Yeah, sure. We focus on consumer impacts following the millennial habits. So millennials have less money, more debt, but they're a big group and they expect to spend $1.2 trillion by 2020. From a consumer behavior standpoint, they're much more selective. They have a higher desire for authenticity and locality in products, and definitely they're much more inclined towards technology. So the way to play that is to focus on companies and sectors that have either exposure to experiential shopping or price comparison or even Internet of Things.
Vasilis, thank you for chatting to us this morning.
Thank you, Andrew.
Thank you for joining us. Please visit our website to download your copy of our monthly investment update, and we look forward to seeing you in the next video.